Warren Buffett's Management Secrets Number 10. The secret to determining salaries. Great managers are few and far between. Not all business is the same. Some have mediocre economics. Others exceptional economics. A business with exceptional economics will make even a lousy manager look good. How do we tell the difference? By measuring the manager's performance against others in the industry. For example, if our business is earning 20% on shareholders' equity, we may think it is great. But in truth, we may not be doing so well. When we compare it to others in our industry, this would not impress Warren. Unexceptional performance with an exceptional business does not inspire Warren to dole out a bonus at the year-end. If our business was earning 5% on equity, we may think compared to all others we are at the low end. But when comparing to other business in our industry, we might find it is in the high end. This would indicate the manager is keeping us ahead of the game, and be rewarded accordingly. Warren believes in performance-based pay, based on the value added by the manager, not the inherent economics of the business. He pays bonus according to how much the manager improves the underlying economics of the business. Another business tip from Learn Accounting Fast. Next, the secret to motivating the workforce.